Hey everybody, my name is Allison Ostrander and I'm the Director of Risk Tolerance as well as an Options Specialist here at Simpler Trading. And in today's video, I want to talk about an indicator that I really love and enjoy trading with, and that is the Divergent Bar Indicator. This indicator can be extremely useful for trading and helping determine when you might receive a higher high or lower low compared to the bar that prints the divergent bar. An example of this happened on an intraday time frame today on the hourly chart. If you joined me in the free options room that morning, it was a signal I was discussing while I was on the mic, and it did end up printing going into the close of the mic, and it was a bullish divergent bar signal. This morning on SPX, we basically opened a little bit lower than the close Friday, went down, tested support around the hourly chart of the 10-period simple moving average, held it, and then ended up overall forming into the close of this bar a bullish divergent bar. And so because it's a bullish divergent bar, it means that it has a good probability of a higher high within the next 3 bars. So on the hourly chart, that's the next 3 hours, compared to the high of the bar that printed, aka the high of that morning so far, the first hour of market. And so I decided to take this trade signal in the mastery, and we opened right after this at 9:32 a call vertical spread set around 4,300 at 90 cents net debit. And we looked for a follow through of that higher high. And as you can see, it didn't happen within the first hour, but that second hourly bar, this is why I like to give it at least 3 bars to see if it can follow through. And usually that's the time frame I give it. And for this one, it took the second bar, the second hour, to follow through with an excellent higher high. And so we were able to then profit recycle this call vertical spread into a butterfly. And by taking this action the way we did, we set up a 5-point vertical butterfly for today's expiration. You can see it there. But we did so protecting our capital risk and locking in technically a 45-cent profit. When you take the credit from the credit spread, combine it with the debit, the difference is a 45-cent credit that we locked in. This is a strategy. It's called the profit recycling strategy. It's one that I love to use intraday trading. It's how I'm able to take advantage of intraday setups like this without technically day trading. And SPX cash settles. So we let this go into cash settlement, and we ended up cash settling at $42.97, which was $2 in the money, $2.14. So that combined with our 45 cents of profit ended up being a $2.59 profit overall, right, based on a great entry here. And we actually had other divergent bars that printed that day. If you see here, this bar was a bearish divergent bar, which shows a good sign of a lower low to follow through, which we see followed through on the following bar, right? Then this one printed a bullish divergent bar, which means we might follow through with that higher high again within 3 bars, and we did it immediately with the next bar. Usually when you have back-to-back divergent bars, it might be a sign of chop. So you want it to be a little mindful of that. You can see the overall consolidation that happened on a smaller time frame during that moment. And then the closing bar today was actually a bearish divergent bar. So I'll be curious to see if we get a follow through tomorrow or not with a potential low compared to this one that we had in the last hour. Maybe we open a little bit lower tomorrow like we did today. But certainly, as you can see, this has been a very beneficial indicator for me to be able to take advantage of this intraday setup and have that good probability of a follow through to the upside and allow me to lock in a profit and set up a great bonus trade into the close. But this indicator, not only on an intraday time frame, right, it is also useful, I find, all the way up to a monthly chart. So we have here the monthly time frame for SPX, and you can see a couple of months ago it made a bullish divergent bar, and this one is yet to follow through. That's what this alert here is for, 4307.66. And so I've been looking to see that within the next 3 months, aka by the end of August, this is the 3rd bar we're on right now, August, the monthly bar, if we could get a move back up into this range and follow through with that higher high. And certainly it didn't necessarily look good that first month, but if you didn't buy right away, this made for an excellent discount price and also gave you a clue that we might bounce up later this year. If you go back in time and you look at these divergent bars that happened right before the pullback, one, notice how they are back-to-back divergent bars. And overall, right, that's when we start to go into chop before we sold. But two, all of these technically followed through. This was a bearish divergent bar that had a lower low the next month. Bullish divergent bar, higher high. Bearish divergent bar, lower low. Bullish one, higher high. Bearish divergent bar, lower low. Bullish divergent bar technically had that higher high, but ultimately couldn't get past 4,500 and gave it back up. So this signal is still valid into the end of August, and we'll see whether or not it's able to follow through with a move back up to 4307.66, or if it, this is all it gives us and we end up rolling back over. In line with this level, not too far away from it, is the 10-period simple at 43.23. So I'm looking personally at this range to see whether or not it will hold as resistance, or if we end up breaking above it. If we do, I'm looking for another test around 4,500 ultimately. If it can't hold this level, then I'm looking for a reversal back down into support, and we'll see whether or not the market can hold up or if this ultimately leads to a further sell-off later in the year. But that is the use of the Divergent Bar Indicator. Hopefully it also gives you a target that you might see follow through to the upside, maybe tomorrow or at least later this month potentially. And we'll see whether or not that happens. Divergent bars don't always follow through, but I have found that they have a pretty good success rate overall, which is why I like to take it into consideration when using my charts and my trade analysis. And certainly when it's in line with other indicators, I think it can create a valid setup where, as long as I'm always mindful of my risk, right, it's one I consider taking. As always, thank you for joining me. I hope you guys have a great rest of your trading day. May the trade be with you, my fellow Jedis, and I look forward to talking to you next time. Bye. Hey, Allison Ostrander here, Director of Risk Tolerance at Simpler Trading. Thanks for watching the video. If you enjoyed this video, please be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. As always, may the trade be with you, and we'll see you in the next video. Bye.